Good afternoon. Welcome into a Veterans Day edition of Market Talk, November 11th, 2020. I'm your host, Jesse Allen. Great to have you here. Thanks for joining us. You can find us online, markettalkag.com, on Facebook and Twitter and Instagram as well, at Market Talk Ag. Soybeans a little bit higher today, quarter wheat lower. We're going to talk about it with Bill Biedermann with agmarket.net joining us here today. Bill, how are you?
I'm doing pretty good, Jesse. Thanks for having me on.
Hey, I appreciate you joining us, Bill, and let's dive right into things here today. Soybeans, we had an impressive day yesterday with that WASDE report throughout the entire grain complex. Today, quarter wheat lower, as I mentioned. Bean oil prices up to some new high ground. Let's start there. We saw November beans up 5 today, 11.43 at a quarter. Some of those other contracts pushing over 11.50. What are you seeing in the soybean market today, Bill?
Well, I don't think there's much of a downside exposure at this point. I mean, any one day you could be down 20 or 30 cents, but that's not a lot in the picture that we're looking at. I mean, they set the situation, Jesse, up for something that's been unprecedented, going from 610 million bushel carryover just a couple months ago down to, the 190 million bushel. It's just, we've gone from a 17% stocks to use ratio down to 4. The last time we did that, it took 2 years for the numbers to make that big of a jump. So to do it in a couple of months, there's a lot of price refactoring and repricing that needs to take place.
And a lot of folks, farmers, they're out there looking at all this. And we've talked with numerous folks about how there just seems to be a lot of potential in this soybean market. And now with that big run up yesterday and a little more today, a lot of people are starting to wonder, is $12 beans on the future side, is that a reality? And seems like we're within striking distance of that, Bill.
Oh, I definitely think you are. There's no question about it in my mind. I mean, we're looking at the last time we had stocks to use ratios go down to 6%, or what is today now 4%, and it could even get worse. Prices jumped all the way up to $16. So, I'm not saying that that's what's going to happen by all means. But what I am saying is that there's a really good probability that you're going to see the market move higher. We went from the last time this happened, we were actually starting out at about $8, and we went all the way up to 16. And then there was a pullback in 2008, and then we went back up into the 2011-12 demand period. So we're really looking at a very similar situation to that. Question is, how high can we go? We've been in a deflated commodity market for a long time. And now we're starting to look at possibilities of inflation with all the stimulus around the world, not just the country.
Yeah. And, looking as well, this bean oil market been doing fairly well. Also another good day there. And I think that's something else that's kind of factor in and watch that as well. And just this entire soy market in general, if I'm a producer sitting on some soybeans, there's a lot of opportunity to take some profit here, or at least put a floor underneath you. It seems that's kind of been the name of the game I've been hearing from folks the last few days.
Absolutely. So, you're speculating with just flat out ownership for not just the board going up and down every day, but for the basis too. And if you live in the Eastern Belt, you're kind of bummed out because the whole Eastern Belt basis has fallen back pretty hard, while the Western Belt's still way, way higher than normal. So we've been suggesting that to our clients: get out of a position where you're in total risk penny for penny every single day and move into something that's less risky. You're selling it at a profit to start with. So, from a per acre standpoint, this is amazing, especially from a few months ago. And then maintain that ownership, because the fundamentals do suggest this thing could it could reprice to levels that we're just not sure about, but it would be higher than we're at. And you'll be able to pick up between 50 and 75% of that if you use an option.
Well, Bill, let's switch over to corn. Corn was a down day today. We've kind of been testing some highs, trying to break through some of that resistance. I know there's been some, signals in this market, a little more cautious optimism there. Finished that December contract today down 5 3/4 at 417 at a quarter. March down 427. What are you seeing in this corn market? Obviously, we had the great day yesterday. amid that WASDE report, but today a little bit of a pullback. What are you seeing there?
Well, the reason for the sell-off today was a little bit of risk-off profit taking, but there was a story out of Russia today that they're going to go ahead and try to export their entire commitments versus the talk of, that they won't be able to meet those commitments. So I think that's a story that's still developing. We'll have to see, but there was some selling, especially over in wheat, that pulled down the corn. Corn's got really critical weekly resistance at 423 on December. We closed at 417, but our high today was 428. So we're really looking for a close above 423. That'll open the weekly charts up towards the 440 is the next mark. But I got to tell you, from a fundamental perspective, this isn't over. I mean, the WASDE, the World Ag Board, has been putting out some pretty hard to believe numbers for about a year and a half now. And finally, yesterday, they made a revision to China, which they've held at 7 million tons of imports for the last 3 years, even in a year when they had flooding, they had droughts up in the north, they had army worms to beat the band. And bottom line is they left the production at 260, which is the same as a year before and the year before that, and imports at 7. They finally revised those to 13. But I got to tell you, the trade is closer to 25, maybe even 30. So that revision that they gave us yesterday equated to, I think it was 325 million bushel revision in the export number. And if they go the other half of what the trade is expecting, it's another 400. So your carryover dropped dramatically yesterday from actually 2.7 billion bushels 3 months ago to 1.7 billion bushels yesterday. And that number is going to have to get smaller to get all these numbers factored in.
And obviously, I know a lot of producers who are sitting on corn. I'm an Iowan. I know a lot of folks throughout parts of Iowa that they've just said, hey, we're going to throw some corn in the bin here. And they've been kind of focusing on soybeans. But, with the things you're talking about, with that China demand, with some of the revisions there, and looking at this corn market, I know it's cautious optimism, but I think some folks are kind of, thinking along your lines that, this isn't over and maybe we could see push through some of this resistance, especially that 423 mark.
Oh, I'd bet a hamburger on that one with you that we would. So I'm not too worried about the 425 number. I think the question is how long do you stay in the mindset of hold ownership? Now here's from a speculating perspective, it's okay to get bullish, it's okay to get bearish, it's okay to have some price targets in mind. But from a farming perspective, you have to be really careful because all of a sudden you'll get caught into thinking, well, I got to get it up to 450 because then I'll be able to pay for that land or whatever your brain is telling you. And that's just totally wrong because what will happen is you'll miss the selling opportunity and you'll be kicking yourself for the next 3 years. We're just coming out of a whole agricultural near depression, probably the worst since the 1980s. And we got to be really smart about this. So just like soybeans, when you get up into these price levels, you should be getting out of cash positions, which are day-to-day up and down, penny for penny, and converting that into a less risk position. Like today, we sold some corn, got a pretty good basis bid out west, and we replaced it with some three-way option positions. We got $1 potential upside gain. But if it goes down, we really don't have much risk until it goes down 60 cents. Well, I'm okay with that. I'll take $1 upside and have a box of no ownership underneath me. And it's only costing us I think I paid 15 or 18 cents for those today. Well, if you were to move your grain into an elevator, you couldn't even put it under minimum storage for about that. So it's cheap. It gets you into a position where you're still in the game, but you got less risk. And that's what it's all about. Sell at a profit and stay in the game, but don't go broke staying in the game. And then focus on next year. That's the way we're looking at this.
Great insights there, Bill. The wheat market, you mentioned that kind of the thing that drug corn down a little bit today. We've obviously the news from Russia you mentioned. We've been watching this as kind of a weather market with the Russia and Black Sea regions. What are some signs you're seeing in the wheat market for some of our wheat growers out in the plains?
Well, unfortunately, we're still trying to compete against the world. We're not the cheapest wheat in the world.
Mhm.
That makes it a little difficult. We still got large stocks. We've built stocks over the last couple of years. When I'm talking about on a world spectrum, so from that perspective, it's hard to get real bullish wheat. But I will say this: I think Kansas City wheat is horribly discounted to Chicago. I think there's great opportunity in owning Kansas City, selling Chicago. Now, since I said that, that probably means the trade will go wrong. Um, but I think the upside is limited to what price level. I don't know. I think it's going to become a feed competitive market at some point in time. But right now, with China buying, India, Pakistan, South Korea, I mean, we're seeing business out there that we have not seen in a long time.
Bill, let's flip over and talk livestock. Hogs again down a little bit today. I know a lot of folks a little more worry creeping into this hog market. Obviously, COVID has a big impact on hogs and cattle right now. But looking at this hog market, what are some things you are seeing there, and what would you tell hog producers right now?
Well, obviously, we've had a real debacle financially in the hog industry, and we're still trying to get rid of sows and clean up some herds that
Mhm.
lost their market. And until that happens and we get towards the end of that cleanup process, we're probably not going to go a lot higher. We could sell off some, but let's just say we did sell off. I think that would, I know this sounds crazy. I think that would be really healthy for the market. If we could pull this market down $7 to $10 on the board, it would do a couple things. Number one, it would put us in a position where from a speculative interest, investment money is starting to look for inflation-based invest places to go. And typically food and fuel are those two places. If you look at history, whenever inflation exceeds 2%, money moves into food and fuel. And in the COVID experience, what we found out was instead of going out to eat at restaurants, we stayed home and our kids
Mhm.
stayed home from school, which was horrible because they cleaned out the freezer in like a week. So we consumed way more with COVID than we did without COVID, but we had a lot of logistic problems. And so I think if we could sell off, it would give us an opportunity to one, that would probably take care of all those hogs that need to finish getting killed. Number two, it would give us a chance to get that product bought up and snagged up. There's nothing better than a cheap pork chop. And
Mhm.
then third, it would attract investment money. And that's what we need. And once you get that, then you've got a strong demand base because they bought it cheap and they're going to keep buying it. They like it, they tasted it. And secondly, you've got non-user demand, which are the funds. And once the funds get attracted to something, it's like a stinking locomotive.
Switching over to the cattle side, a little bit of an opposite story there. A lot of cautious optimism in the cattle market as well. Feeder cattle, feds down a little bit today, live cattle up a little bit. I'm looking at the countryside though, still not a lot of activity here this week. Things pretty quiet. It seems like asking prices kind of 112 in the south, 175 in the north. Just not a lot of activity in the countryside, and that's kind of what we've been watching. Futures prices have been okay, been climbing a little bit, but watching this countryside trying to catch up a little bit. What are your thoughts on the cattle market after today?
Well, we were trading a really huge supply or swamp of cattle coming
Yep.
at us, and number one, it didn't really develop. Number two, it started to develop, but we chewed through it real fast. And what we're hearing right now from our contacts is that the weights are actually starting to come down. I didn't check USDA's website to see if they're reporting that yet, but the
Hmm.
bottom line is, if the weights are coming down and the numbers are getting cleaned up, I mean, there's really no reason to be real bearish. Again, this market has been trading in a beautiful trading range, beautiful waves that it's, Elliott waves that it's moved. We're getting up towards resistance at 116. I wouldn't be a buyer here. I'd probably be a hedger if I wasn't already hedged. And but if that thing sold off back down towards that 110 area, well, I as a trader, I'd probably be looking at buying that.
And really, just overall, Again, with the cattle and hog markets, it just seems like it's a little bit touch and go, and it all comes down to profits for your specific operation with anything. Obviously, we're talking about with futures and commodities, but especially I think in this cattle and hog market, it just seems like it's going to come down to your specific operation and what makes the most sense for you.
Yeah, like we have some feedlots that we work with, and they did a lot of hedging at 116 the last go around, and they were just really tickled. We had some other guys that were a little bit more gun shy of doing that, but they ended up buying puts to lay a floor in and sold calls up near 120. So they're saying like, hey, I'll be happy with a 113 floor and a 120 ceiling price, and kind of a min max type of contract that you build yourself. And those worked out great.
Bill, any other thoughts? We got a couple of minutes here. Just with this market in general, anything you are seeing you want to reiterate or touch on again, producers who are listening, some things that they really need to consider?
Well, first of all, from an ag standpoint, I think we're going into an era that I mean, I've been doing this for 40 years, and I've only seen something like this. This is the third time I've seen the demand curve and the supply curve shift at the same time like this. So that's pretty incredible, and it creates really a career type opportunity. The things that can really blow this up and accentuate the moves would be to watch the dollar. We get down below 92 bucks. Historically, the last time we did that was the 2005 through 2007 period. That was the exact same time that stocks and beans fell from, I believe, 19% down to 4% over a 2-year period. We've done that in just 3 months. And the dollar is almost down below 92. It's at 93. So it's dropped 10% in value. So your beans that are now trading at $11 are really the same as a $10 bean a few months ago, just based on currency. So I think that keep your eyes on currencies, keep your eyes on the big picture, the trend. And I think we're going to be in for a really good route here. But I really want to stress to manage through it so that you're locking in profits, but you're still in the game just in case it explodes.
Well, Bill, if folks need a little help with their trading and management and everything else, obviously the risk of loss in trading commodities, it's substantial, but there's folks out there like you and the crew at agmarket.net to help farmers and producers through that. What's the best way to reach out to you guys to get a little help?
They can call us at 844-4-AG-MARKET, MRKT, 844-4-AG-MARKET.
And that's a very, very easy way to do that. Or you can also find them online, agmarket.net. Bill, it's been a pleasure. Great to have you on for the first time on Market Talk, and we'll look forward to talking to you again soon.
Okay, thanks a lot, Jesse.
Bill Biedermann with agmarket.net joining us here today on Market Talk. Coming up tomorrow, John Heinberg with Total Farm Marketing by Stuart Peterson will be our guest as we continue taking a look at the markets here this week after a good WASDE number on Tuesday. You can find us online, markettalkag.com, on Facebook, Twitter, and Instagram at Market Talk Ag, and on all of your favorite podcast sources, including Apple Podcasts, Spotify, iHeartRadio, and more. This has been the Veterans Day 2020 edition of Market Talk for November 11th. I'm your host, Jesse Allen. Have a great afternoon.